Hello traders, welcome back to Nova channel. And today let's continue another topic and I think you're definitely concerned. If you traded gold in 2024, you could probably agree it was a manageable market. The price consistently made new highs and our buy trades were often profitable. But what about the current market? It has become much tougher with continuous liquidity sweeps and false breaks. Why is there such a big difference? Today, we will analyze this shift and, more importantly, discover the strategy to survive and profit in the current market full of traps. Let's get started. In 2024, the gold market was characterized by a very strong and clear uptrend. Despite some corrections, the price consistently made higher highs and higher lows. This is why that years were easier to trade. First, clear direction. You just needed to identify the main trend as bullish and focus on looking for buy opportunities. Second, reliable pullbacks. The price often corrected in an orderly manner and respected key support levels like EMAs or Fibonacci levels. This made it easy for traders to enter trades with low risk after a pullback. And lastly, favorable trading psychology. When trading with a trend, your confidence is higher and you are less likely to be influenced by emotions. In short, the gold market back then was a feast for trend-following traders. In contrast, the current gold market has changed. Instead of a clear trend, we will see the price primarily moving in a wide range with following characteristics. First, fall breaks. You can see that the price might be support or resistance level, but then immediately reverse, trapping traders who enter on the breakout. And next thing is liquidity sweeps. These are sharp spikes in price that moves past a previous high or low, sweeping out stop loss orders or retail traders, and then immediately reversing. And lastly is whipsaws. The price moves quickly in both directions, making it very difficult to play a stop loss. And these factors make traditional trend following strategies less effective, leading to frustration and losses for many traders. And now, how can we adapt and profit in this environment? Because the market is never wrong. If so, we need to change our mindset and trading strategy. And these are my advice for you in this market. First, we need to lower your risk. This is the number one rule. Due to erratic market volatility, reduce your position size to a minimum. For example, if you normally trade with 0.1 loss, try reducing it to 0.05 loss. The goal is to protect your capital rather than aiming for big profits. And the second rule is change the way you set the stop loss. In current market, a stop loss that is too tight is very likely to be swept. Place your stop loss behind a clear or support resistance zone for reliable higher lows. Don't set your stop loss based on a fixed number of pips. And third rule is wait for the liquidity sweep to complete. Instead of trading for the breakout, wait for the false break to happen. When the price moves past a previous high and immediately reverses, that is your signal to enter a trade in the opposite direction. This patience will help you avoid getting trapped. And the fourth rule is take profits quickly. Don't hold for too long. In the sideways market, profits often last for only a short time. When you have a small profit, be hold and take a partial or full profit. Trying to hold a trade for a larger profit can cause you lose to everything when the price unexpectedly reverses. And next is use multiple time frame analysis. Use the larger time frame like 4-hour or daily to identify the strongest support or resistance zones. Then switch to the smaller time frames like 15 or 5 minutes to look for trading setups within those zones. This gives you a broader perspective and more confidence. And lastly, let's reduce the trading frequency. Don't feel like you have to trade every day. In a sideways market, not taking a trade is often the smartest action. Be patient and wait for a high probability setup. By accepting that market has changed and adjusting your strategy, you will no longer be a victim of these traps, but a person in control of the game. In conclusion, the gold market is constantly changing. What worked well in 2024 may no longer be suitable now. The signs of professional trader is adaptability and flexibility. Apply these strategies and train your discipline, and trust the market traps into your own opportunity. And share this video if you find helpful, and don't forget to subscribe to the channel to discover more trading secrets. Happy trading and see you in the next video.